Hey folks, it is April in Dallas, and that means your host, Clayton Collins, is suffering through some pretty tough seasonal allergies. But I made it work, and I got a great episode in today with Gil Arbitsman, the Chief Financial Officer at UMortgage. For those of you that aren't familiar with UMortgage, this is Anthony Casa's new mortgage origination shop. And if you aren't familiar with Anthony, I'm surprised because the man is not afraid to be in the headlines. Anthony has made a lot of noise in his efforts of building AIM and now launching UMortgage and recruiting and acquiring some top talent into his organization. This conversation with Gil takes a look at a lot of the operational considerations from building a business and biz dev and marketing that you usually wouldn't have with the chief financial officer. But we get to have this conversation through the lens of the CFO, talk about the finance considerations of growing, acquiring, and recruiting in a tough market, and really get a glimpse into a top-notch finance leader who has a true lens and a true focus on growth. And I'm giving Gil a lot of compliments here, but I really did enjoy the conversation and think he's an incredibly smart finance leader. I hope you enjoy this conversation with Gil Arbitsman.
Hi, this is Sarah Wheeler, Editor-in-Chief of HW Media, and I'm talking to Ed Messman, CEO at Rook Capital, about their shared value investment program. Ed, how is Rook Capital creating new homeowners?
Yeah, the shared value investment that we created helps prospective new homebuyers by adding up to 25% to their down payment in exchange for an equity position in the house. By doing that, you effectively lower the monthly cost of homeownership to a level that's affordable and within their budget.
Thanks, Ed. And listeners can find out more at rook.capital.
Gil, welcome to Housing News.
Thank you so much, Clayton.
Thrilled to have you. So, Gil, as I was prepping for this conversation, I looked at your timeline and your most recent role as CFO at UMortgage, and you started in June of 2022, which arguably is it's a tough time to start a new role in finance in the housing industry, as Q3 and Q4 kind of like set off the pivot points of like a relatively brutal housing recession. So give us a glimpse into like kind of your decision-making process of changing roles in that like kind of that hot period in summer of 2022 and kind of what it's been like ramping into this new capacity of CFO at UMortgage.
Yeah, so early 2022 was an interesting time. I can't say I had a crystal ball and I knew how the whole year was going to turn out, but it was pretty evident that the market was running a little too hot. The Fed was going to step in with intervention measures, and sort of the hornet's nest was going to get shaken. So when I was thinking about, my future, I really wanted to align myself with a company that was focused not just on, navigating the waters over the next 18 months, but really a company that had a long-term sort of approach. So when I first spoke to Anthony, it was actually March of 2022. I'd say I was vetting him more than he was vetting me. And the more we spoke, the more it was clear that we had full alignment on our core values, on what we thought about the market and what we thought the best model for a mortgage company in 2022 and beyond.
Yeah, I want to come back and talking about UMortgage and Anthony. I've asked him all the questions, but I'm dying to like hear like the vantage point of another member of the executive team. So I want to come back and spend some time there. But let's focus in on the market for a minute. So like Q3 and Q4, like super painful pivot points for some, for folks that were deep in a refi pipe. It felt like a little bit of respite for a minute, like a little bit of a breather, but volume fell off so fast. How did you handle being part of UMortgage, or how did you handle being part of the mortgage business in that period of such rapid change?
Yeah, so UMortgage is an interesting position because we are a startup, right? The company's only 2 years old now. So we've been growing, but I'll be honest, it's easy to grow when you're small. So I will say, we were not unaffected by the market conditions. I'll say, we liked our growth Q2 2022. We liked our growth in Q3. Q4, we saw early Q4. I mean, it was bad out there, and we were kind of flattening out, and everyone else was shrinking. The market was shrinking. We weren't growing, and we quickly pivoted, and we made a conscious effort to be proactive and really focus on growing our LO base and really focusing on relationships and building those, proving our value and our LOs proving our value to their local markets. And that really helped us by doubling our growth in Q4.
I know you came from a background with a lot of FP&A, financial planning and analysis experience. How do you weigh thinking about the KPIs of running a mortgage lender, and specifically in this time period, when you talk about kind of a lender that was in a growth phase, flattens out, and then a shift to focusing on originator growth? And from my vantage point, there has to be kind of a measure of how do we think about productivity per originator, and then how do we think about total volume growth for the organization, and balance those in a way. So how are you thinking about the KPIs in that period, and has that evolved at all as we've come into the first half of 2023?
Yeah. So what we do is we focus on sort of what's the process, and we think our peer-to-peer community, our LOs challenge each other. They share best practices. And again, by focusing on your local community, focusing on relationships, following the playbooks that we laid out for our salespeople, we've seen people, the guy doing 2 loans a month can now do 4. The gal doing 5 loans a month can now do 10. So we really believe in our model, and we've seen LOs have a lot of success.
So let's go deeper on that. So what are some of the practices that you're seeing get passed across the network, the coworkers that are helping people move from 2 to 4, and how much of that is market driven, from Q4 being just doldrums of production to a little bit of activity in the first half or the beginning of a spring home buying season, and how much of that is just productivity and skill and best practices that are getting passed across the org?
Right. So we're building a scalable model here. So we could have looked at the dip in the market and said, hey, let's pull back the spending, right? Hey, do we need to hire another body in the marketing department? Do we need to create all these great assets that our LOs can use? Or should we, save some nickels here, save some quarters here? And we decided to go full throttle, right? We're continuing to invest in our infrastructure. And we think that's why a lot of our LOs had success when the rest of the industry was declining. And when I mentioned that scalable model, when you have an LO base of 300 plus LOs, you can build assets that are customizable by the LO so that you don't have to make individual assets for each LO. And everything we do, from our technology team to our marketing team, it's all built for scale. And we think that we can support, continuing our LO growth. And when we have 1,000 LOs, we won't have to double or triple our marketing team or double or triple our technology team. And we think in this market, the only way to survive is with scale. So everything we do, from our corporate infrastructure standpoint, has that scale in mind.
That's interesting. I a little behind the scenes at HW, our vice president of finance and accounting. His name's Andrew. Him and I are attached at the hip and talking about forecasts and reforecasts and financial performance and thinking about allocation of resources. And this question that I think leaders in all industries, particularly in housing with the cyclical elements, have to think about when they're ready to put their foot on the gas in a growth cycle, and when is the time where you need to be more cautious on spending. And we're so active in thinking about the financial conditions and the market conditions that kind of give us an indicator of when is the right time to get more aggressive and put our foot on the gas, and not be too early, but definitely not be late. I'm looking at any operating a business in a cyclical market as this is the market to eat up market share, and this is the market to really be aggressive on bringing new capabilities and growth initiatives to market. So tell me about the role you play in your organization on thinking about the allocation of resources and growth mindset versus protect the core mindset.
Yeah. So growth is important to us, and we're all about full transparency. And Anthony's very vocal on LinkedIn and social media. And while you might think that he's speaking to an audience of LOs who might want to join UMortgage, he's actually speaking to our corporate team members. I think it's important in this market. You were posted on LinkedIn recently about all the fear, uncertainty, and doubt out there in the market. Our people see that. How can you avoid it? It's everywhere, right? It's on all the headlines. So, we want to project not just confidence in what we're building, but confidence in our future growth. And I think that's good for team member morale. It clarifies the growth path for our team members to become our future leaders, and we're committed to developing our future leaders, and just generally helps with buy-in and our long-term vision. So that's kind of where our head's at in communicating our vision for our future growth.
Yeah, you might have for the perceived size that I kind of assume UMortgage is at right now. You may have one of the more complicated jobs as CFO in terms of managing a capital table of a lot of employee owners in the business. And I'm bringing that up right now because I think it ties right into this buy-in that you're starting to talk about in terms of team member buy-in to strategy and growth. So give us a glimpse into the employee ownership plan that you and the executive team at UMortgage introduced and how that's playing out.
Yeah. So when I joined in the middle of 2022, Anthony had a growth plan in mind, and we knew that it would take a capital investment to get there. And we considered various funding sources. We talked to private equity. We talked to some big players in the mortgage market. And to be honest, we didn't really want that influence in our company. We believe in our culture. We believe in our team members. And we thought that, raising capital from our branch managers, loan originators, and team members was the way to go. And I would say we set out a plan, and over the next 120 days, we raised $6 million from about 36 insiders. And I think that was the best decision we could have made. Those 30 some odd team members took on an owner mentality. And the success of that led to the rollout of U-Shares, which is our team member equity opportunity. So remember, this is after-tax dollars that our team members are investing in the company. And when a team member becomes an owner, they have a mindset shift, right? If there's a pain point, they don't want to just throw a body at it, right? They're thinking long-term. And they understand that, like I mentioned before, like building for scale, now they understand the goal here isn't just my paycheck next month. The goal here is setting this company up and setting our team members up for success when we grow to 1,000 LOs, when we continue to double our volume quarter over quarter. And we've had over 100 team members sign up to invest, and we think that number is going to continue to grow. And the benefits that we've seen from those early investors, I'm excited to see that same thing from these team members as well.
That's interesting. I mean, there's so many different flavors of employee equity programs, from ESOPs to incentive equity plans to option pools. The path that you chose with growth equity rounds funded almost entirely by existing team members has some major positives in terms of buy-in. There has to be some risk as you kind of played, I imagine that as CFO, you have to play devil's advocate sometimes on strategies and think about the risks and the downside. What were some of the risks that you kind of brought to the table that you guys have either said, no, that's not a risk, we can handle it, or something that you're still kind of aware that, hey, this is a lingering challenge with this model, but it's worth it because X?
Yeah, I mean, to me, it's very low risk, actually. I mean, it's a very low barrier to entry, low barrier to exit. So we tell our team member, there's no lockup period, vesting period, complex calculation. I mean, you sign up, you contribute, you're a shareholder. You want out, there's a process to get out. So, we don't want people thinking like they're tying up their equity and then their hands are tied behind their back if they want to leave the industry or buy a house or anything like that. Fully flexible. I think one of the advantages of it is just adds to the accountability and pressure on our management team to not just support our team members as our employees, but to ensure their long-term success and work to not just help homeowners, but also to build long-term shareholder value for our investors.
Does that put pressure on, or not pressure, but like a responsibility on you to be doing monthly, quarterly, or annual kind of like mark to market on equity? Like how do you think about like the inflow and outflow of capital and like the challenge of constantly valuing a small business?
Yeah. So Right. We're constantly looking at our valuation is built on our assumptions on growth, and we're constantly measuring our actual growth against our expectations. And the last 2 quarters have actually exceeded our expectations. So that's great, but that doesn't mean future quarters will continue. So we're constantly staying on top of that. But we're also being very proactive about our growth. So that, whether that comes to acquisitions or just general LO recruiting, everything we're doing, like I said, building for scale and being proactive about setting ourselves up for success, not just in this market, but in future markets.